Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is November 14 and we're starting from euro-dollar pair with Dean Leo. The euro gradually increased not only due to the ongoing rebound but also largely because of the revised US inflation forecasts. If on Friday it was assumed that the growth rates of consumer prices would accelerate from 3.7% to 3.8%, over the weekend the forecast was revised towards a slowdown to 3.3%. And if these expectations are confirmed, the possibility of another increase in interest rates would be ruled out. It will actually be more appropriate to talk about a rate cut. Of course, not in December, but at least early next year. The EUR-USD pair has been moving in a sideways range of 50-70 points in a week. There are no crucial changes, and the quote seems to be in the process of reaching a balance of trading forces. On the 4-hour chart, the RSI technical indicator is moving along the 50 midline, confirming a price standstill. The alligator indicator, on the same time frame, has some intersections between the MAs, meaning that the upward cycle is slowing down and a flat is being formed. In this situation, we have two key levels, namely 1.0650, which considers a bearish scenario, and the level of 1.0750. And if the price manages to breach 1.0750, this would suggest an extension of the upward cycle. Complex indicator analysis provides a mixed signal in the short and long-term timeframes due to a prolonged trading range. The next stage of our review is the next major. It's time for GBP/USD. Jakub Nowak would help us. Buy pound when the quote hits 1.2283 and take profit at the price on 1.2335. Growth will occur after strong labour market data from the UK. When buying, make sure that the MACD line lies above zero, or it's just starting to rise from it. Pound can also be bought after two consecutive price tests of 1.2258. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.2283 and 1.2335. For short positions, sell pound when the quote reaches 1.2258 and take profit at the price on 1.2190. Pressure will continue after the attempt to break through the daily high fails. When selling, ensure that the MACD line lies below zero or drops down from it. Pound can also be sold after two consecutive price tests of 1.2283. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.2258 and 1.2190. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tapas. Early in the European session, gold is trading around 1945.77, around the 21 SMA and 200 EMA. On the H4 chart, we can see that gold broke the downtrend channel, but is showing signs of exhaustion of its bullish strength. To recover, gold needs to consolidate above 1946. During the US session, the US inflation data will be released, which could generate a strong movement in gold. In case the data is positive for the US dollar, the metal could fall towards the 1921 and even towards the psychological level of 1900. If the data is negative for the US dollar, gold could resume its upward cycle and could reach the 1968 level, or even 1975. If gold consolidates above the 21 SMA, in the next few hours, we could expect it to continue rising and reach 7-8 Muri level at 1968, and even the psychological level of 2000 USD. On the other hand, in case gold falls below the 200 EMA, we could expect it to find good support around the 6-8 Muri level at 1937, which could give an opportunity to resume buying. On the other hand, gold could turn bearish if it falls below 1937, 6-8 Muri level, and could accelerate its decline to 1921 and 1906, 5-8 Muri. Since November 8th, the Eagle indicator has moving in an oversold zone. If gold makes a pullback in the coming hours, and as long as it remains above 1937, it will be seen as a signal to buy. And now it's time for USD CAD currency pair. Arif Makmur describes. Loonie on the 4-hour chart seems strengthening against USD. This can be seen from the slope of SMA 50, which begins to go down, as well as the appearance of the deviation between the price movement and the stochastic oscillator indicator, so that in the near future, as long as there is no upward correction which breaks above the level of 1.3850, then USD CAD has the potential to go down up to the level of 1.3744 as the main target and the level of 1.3655 as the next target to be aimed. And finally, here's Laurie Bailey with AUD-USD currency pair focused. Let's have a look. Yesterday, the Australian dollar showed an intention to turn upward and immediately faced resistance at the target level of 0.6388 and the MACD indicator line, its blue line on graphic. The Marlin oscillator also turned upward and encountered resistance at the zero line, dividing the bullish and the bearish areas. Thus, the Aussie's success in overcoming 0.6388 along with the consolidation could push the pair to rise to the target level of 0.6514. consolidation above this level will open the second target 0.6612, a significant level that has emerged since March. An alternative scenario which shows that price can fall to the support level of 0.6295 is also possible by breaching the November 10 low 0.6341. On the 4-hour chart, the price is gathering strength below the level of 0.6388. Perhaps it's still waiting for the moment when the Marlin oscillator moves into the positive territory, to use it to attack the MACD line of 0.6422. Major commodity markets, closely related to the Australian dollar, are in a bullish mood. That's all for today. See you online soon and good luck.